Hey, good morning, everybody. Listen, I posted the first video just giving you guys a sneak peek behind what's behind door number 2 with some of the services that we're providing for IWS and IWS clients, okay? So before I dive in, I wanted to thank all of you that reached out to me privately, and I just want to go ahead and clear something up right out of the gate. The infinite banking concept works for everybody, okay? It works for people that are real estate investors, that leverage their dollar in different transactions. It works for people that carry a ton of debt. It works for people that have a little debt. And what I want to share with you guys is that our goal, all right, is when we do this consultation, our goal is to free up some cash flow, first and foremost, okay, and to eliminate third-party debt. You know, if you guys would take the time and look at how much interest is just slipping right through your hands and being siphoned to the big banks, okay, JP Morgan Chase, Wells Fargo, all of these big banks, they have to find a way, because our monetary system is a debt-based system. They rig this system in their favor by the sake of convenience to keep you in debt, all right? With you in debt, this gives them the opportunity to siphon money out of your paycheck every single week or biweekly or however you get paid, or if you're K-1 or 1099, we can go into that. It really doesn't matter. But the point is that when we do these consultations, we're looking for a way to free up cash flow and to recapture this third-party debt, period. Okay, so yesterday I shared the video. It's like a 30-minute video. And I walked you through the map and how I build this out and everything like that. Today, I wanted to show you a different example. I wanted to show you an example of a guy that is out in California. I won't share his name, but he's a delivery guy, okay? And with that being said, his income is always changing, right? Because sometimes there's more work, sometimes there's less work, but he also has to carry 2 car payments, all right? That's 2 car payments that, even though he doesn't want 2 cars, but for his job, if one car breaks down, he's got to have a second car. Now, living in California, the cost of living can be expensive. Gasoline's just through the roof, all these other miscellaneous taxes and fees that you see, and the guy wants to buy a new house, okay? He wants to put himself in a position on his current income without changing a thing. Without changing a thing, he wants to put himself in a position where he has a down payment to buy a condo or buy his first home. And we wanted to take a look, all right, which we did, and we wanted to offer him some sort of solution or some sort of path forward. So let me share my screen real quick. Okay, guys, listen, this is going to be a short video, all right? But what I want to draw your attention to is he's got this going on right here, okay? He's got a Chevy Bolt, he's got a Ford Focus, he's carrying a monthly payment of $770.18. All right, now we've got him in a policy where he's dropping in about $550 a month, $500 a month or so, and that's how he's gonna build up and start funding his bank. Now, it's important to understand that the infinite banking concept, this is a process. This isn't a get rich quick, this isn't something from outer space. You know, it's a process. Some people, they don't have an additional $5, $10, $15, $100,000 to drop into their policies, so they have to do it on a monthly basis. However, with that being said, with these strategies, we show them how to take advantage of the living benefits immediately while they're building up their cash value to eventually, maybe in this gentleman's case, to have a down payment for his first property. Okay, so what we've done is we've injected, he puts $500 or so inside of this banking mechanism, and every single month I'm pulling out $300 to inject into the strategy to see if we can increase his cash flow, to see if we can save him any third-party interest. Now, this particular gentleman had a chunk of change sitting in his bank account. Before we even went into the strategy, I taught him something else that's not on here, but we took that money, we leveraged that money, and we saved him an immediate $800 in third-party interest before we even got going, okay? Now, if you look, I'm gonna draw your attention down here. I don't need to walk you guys through it, but this Chevy Bolt, all right, at his current payment schedule, it would have taken him 62 months 62 months to finish paying off that car, that would have been an additional $4,500 in interest. All right. With our strategy, we got that down to 48 months. That's time savings right there. And he paid $3,191 in interest. Now you're thinking, well, that's not much. Okay. But you got to understand, okay, is that that's an additional, how many months there? That's, we got that car paid off in 48 months. So that means he didn't have a car payment for an additional 15 months or so. Okay. Now let's look at the Ford Focus. Okay. Car number 2, we'll call it. He was going to have to pay that off for an additional 40 months. That's 40 months of a car payment. All right. We got that down to 16 months. All right. So did we accelerate the payoff? We absolutely did. How much interest did we save him, from start to finish? Well, overall, we saved him $1,362, which I'll draw your attention down here. Okay. We saved him $1,362. Now, mind you, part of the strategy is not on this particular dashboard. We already saved him $700-800 in third-party interest. So we saved him about $2,000 in third-party interest. That means $2,000 that would have went to JP Morgan Chase or Wells Fargo or any of the big banks is now captured inside of his own banking mechanism. Means instead of paying them back, he can pay himself back, which is pretty cool in my book. So let's take another look. All right. How do we assign a value on time savings? How do we assign a value? Now look, we saved him 11 months. 11 months, 10 months, all right? We saved him 10 months. That means for 10 months, if you look at this, his monthly payment on both cars, okay, was $770. Now, that $770, well, we freed that up. That's cash flow. What could an extra $700 do for you guys? Now this particular gentleman, what if he paid himself back, which he did? Why? Because he's got a bank. He can pay himself back. He can charge himself interest. He can do all of these cool things because he has this banking mechanism that's set up, and he has IWS that's here to hold his hand. We're a service-based company, guys. Okay, this service that I'm providing, or we're providing, that I'm building, this is free to every single one of our clients. We do not charge our clients to have this roadmap put together. We don't charge the clients to do the consultation to get inside of the banking mechanism. And all they have to do is go through underwriting and voila, and then we're in business, okay? Now, what was really cool about this is that while we were paying off his debt, all right? We were paying off his debt that you can see on this dashboard, but at the same time, we were replenishing his policy. We were replenishing his bank. So right at the time that we got him completely debt-free, all right, we saved him a couple $1,000. We saved him 10 months in payments. And guess what? Through the growth of the policy and the monthly replenishments that we had going in there, because why not warehouse more of your income inside of the policy? It's a bank, right? There's no point in putting it in the JP Morgan or Chase or Wells Fargo or Bank of America and the 10,000 other banks that are out there. There's no point, okay? Dollar saved, dollar earned, period. But get this, all right? His particular strategy, he wanted to do what? He wanted a down payment for a house. Not only did we save him 10 months, not only did we save him $2,000 or so in third-party interest rate, right? But we also have his banking policy that has $18,000 and some change of readily available cash. We eliminated his car payment. He owns his cars outright. Okay, those depreciating assets are almost an appreciating asset at this time because he's got the pinks on them. He can turn around and sell each one of those cars. Let's say he sells them for, I don't know, $10,000 a piece, right? So he's got another $20,000 because he owned the asset outright. He can do whatever he wants with the sale of that property, but this particular guy would probably roll it into, I don't know, he would either self-finance the next car or he would roll it into that first property, the condo that he's trying to get. So we've got $18,000. We've probably got $25,000 in assets. And here is where the magic happens. So look, guys, this guy doesn't have a lot of money. He's not mega wealthy, but he's got a roadmap. He can see the light at the end of the tunnel. and he is super excited by these type of results. So with that being said, just a quick video. IWS, the infinite banking concept, is for everybody. So you take a look at the debt that you're paying right now, and you ask yourself, do you want to recapture some of that third-party debt? Do you want to pay yourself back? Or do you want to just keep letting the banks siphon your hard-earned dollars out? So with that being said, quick video, wanted to pop on here. Yesterday, I got an incredible response. Thank you to all right, every single one of you that hit me up with a direct message and saw what we were doing. Listen, we can put the same roadmap together for you. If you have any questions, reach out to either myself, Josh Nelson, the CEO of the company, or any one of our strategists. Any single one of them can help you with this. And I'm telling you, just hear them out, because behind the curtain is just magic. So with that being said, I'm going to get back to work, and we will talk to all of you very, very soon.